Cathie Wood's ARK Investment Management took advantage of Tesla's stock recent decline to buy more shares of the electric vehicle car maker. ARK Innovation ETF, the company's flagship fund, snatched 27,556 shares on February 1st after grabbing 27,799 shares at the end of January. Adding those shares together, the total was recently worth $50.9 million. Well, it looks like Cathie Wood is seriously stacking up Tesla stock. So what's really her plan, and what does it mean for Tesla stock? Here's what we know. Now, ARK Next Generation Internet ETF also bought 5,683 Tesla shares recently, worth $5.2 million. These purchases represent ARK's first acquisition of Tesla stock since June 2021. Back in 2021, precisely in November and December, ARK sold Tesla stock to take profit, with Wood stressing that she still likes the stock. Well, we all probably know by now that Tesla is the number one holding in ARK Innovation, as it accounts for approximately 8% of the fund. Wood said in September 2021 that her base case for Tesla is $3,000 per share, as ARK's estimate for Tesla's success has gone up. The main reason for that is their market share, which instead of going down from year-end 2017 to today, has actually gone up fairly intensely. So Tesla slid 31% from January 3rd to January 27th as technology stocks got hammered by rising bond yields and anticipation of Federal Reserve interest rate hikes. The question we need to ask ourselves is, what is the possibility of the Fed hiking interest rates? Well, bigger than expected U.S. job gains last month are fueling market bets that the Federal Reserve will kick off its interest rate hikes in March with a hefty half-point jump. That's likely a bridge too far, given what Fed policymakers have said, where the jobs market is now, and what history suggests. But they do cement expectations that the Fed will raise rates at most of its remaining 7 meetings this year as it moves to battle high inflation without undermining the labor market recovery. Well, the anticipation has indeed had its toll on Tesla stock, but the stock has rebounded close to 11% since then, with Credit Suisse also upgrading on Tesla stock. Cathie Wood believes that the recent declines in tech stocks have created buying opportunities. Now, we all know that Tesla is one of the 6 companies to ever surpass a market capitalization of $1 trillion. Tesla stock has gained over 17,000% since its inception in the hard-to-survive automobile industry. The company stands behind a compelling and critical mission statement, which is to accelerate the world's transition to sustainable energy. Tesla's market cap is more than the combined value of top automakers globally, including Toyota, Volkswagen, Daimler, Ford, General Motors, and Honda Motor Company. And that's largely attributed to the fact that the company is on the good books of both consumers and investors. Everyone seems to be craving a piece of Tesla. Tesla CEO Elon Musk has been in the midst of controversies, and people love to doubt him, especially short sellers. The electric vehicle maker is leading the transition of the world away from vehicles with carbon emissions and towards sustainable energy. The company is said to be part of the solution to a global problem. Climate change has been arguably the central discussion point for world leaders and policymakers recently. Historically, Tesla had struggled to meet car production numbers and delivery deadlines, causing stock performance volatility and viability doubts. But things have been going well for the giant EV maker lately. Tesla currently operates 2 gigafactories, one in Fremont and one in Shanghai, and the company is also getting ready to open 2 new sites in Berlin and in Austin. Tesla recently announced that it could reach its 50% of increased output per annum with just the existing factories. Do you know what's even more interesting? Tesla has also faced multiple setbacks and skeptics with supply chain issues in the most recent recalls. But that hasn't stopped the company from thriving. And we're going to see how the company's recent deliveries and earnings are quite a performance. Tesla presented its fourth quarter earnings at the January 26th presentation, and the figures were great as they beat Wall Street expectations. The manufacturer announced they exceeded their year-on-year 50% target increase in car delivery. Tesla delivered roughly 940,000 cars in 2021 versus 500,000 in 2020. For the fourth quarter in 2021, total revenues grew 65% year-on-year to an all-time high of $17.7 billion, mainly driven by vehicle delivery growth. Tesla reported increased earnings per share of $2.05 versus $1.44 from the previous quarter. Operating cash flow, free cash flow, net income, and gross margin were all significantly up as well. On a year-over-year and a quarterly basis, the financial results were staggering. Although the company predicted it would be able to build 50% more vehicles than it made last year, Tesla CEO Elon Musk said the global chip shortage would stop the company from rolling out any new models in 2022. That means another delay for the Cybertruck pickup, which was originally scheduled to go on sale last year. Musk also said Tesla isn't yet working on a promised $25,000 small electric car, but it will eventually. So as you can see, even though this looks like a setback, it doesn't mean that Tesla won't release the Cybertruck or the $25,000 electric car entirely. It's just a delay in the eventuality of it. Tesla still posted record fourth quarter and full year earnings as deliveries of its electric vehicles soared despite a worldwide shortage of computer chips that has slowed the entire auto industry and other manufacturers of consumer goods. Well, let's benchmark from Tesla's recent performance and their 2022 plans. What could possibly stop Tesla from doing even better in 2022? With a strong balance sheet and ample liquidity, Tesla is ready to invest in product development and expansion. Cybertruck and Model Y industrialization is progressing, and the company is continually innovating. The goal is to reduce manufacturing costs, increase margins, and drive software profits up in combination with hardware profits. Tesla has a few other ongoing projects, such as humanoid robot development, robo-taxis, a new plant for battery production, and improving driver assistance technology, amongst others. But when the auto giant solves the complex problem of full self-driving, Tesla will create and conquer a whole new market, and the stock potential is going to be enormous. It'll be a turning point when an FSD car is able to drive better than a human and when that can be statistically proven. An FSD car unlocks the opportunity for drivers to use the driving time for doing more productive or recreational tasks. Tesla is now at the life cycle stage where demand exceeds supply while the company has solid proof of concept. Tesla stock doesn't carry the startup risk anymore and is moving from growth towards a maturing company with gigantic potential upside. It's not a question of if Tesla will hit a high note anymore, but rather a question of when will that happen. Now the global demand for Tesla EV cars is evident. Tesla stock has managed to operate with an average gross margin of 27.4% in the latest quarter, and the company demonstrated its capabilities and the expertise to scale and produce through Giga Shanghai. Tesla's stock is currently trading far from the $1,229 high of November 2021. The recent stock price drop is an opportunity to enter into a good valuation with great upside. With a $1 trillion valuation, Tesla's success as an electric vehicle manufacturer is hard to dispute. However, there are still many potential hurdles to overcome, from the difficulty of developing affordable EV technology to the risks posed by competing firms. But we've already seen how well Tesla is capable of handling challenges. And we believe there's no greater challenge than supply chain issues. If the EV giant has been able to handle that, then we don't see any stumbling block in the near future. Tesla will maintain its position as a top EV maker for quite a long time. And now that we've come to the end of our session today, let us know what you think via the comments section. Also, remember to like, share, and subscribe. Stay safe, and we'll see you next time.